Hello and welcome to Hot Money on BloombergQuint Live, India's first digital live streaming business news service. This is a show which gets you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our guests on the show. Joining us today are Dharmesh Kant of IndiaNivesh Securities, Dinesh Rohira of Finance.com, and Avinash Gorakshakar of Joindre Capital. He'll just join us within minutes. So thank you to all of my guests for joining me today. On the show today, we discuss that one stock that our analysts have recommended to their clients recently, since the market has been extremely volatile these days. We discussed with our guest one stock that is overvalued and likely to correct. We've seen a lot of these stocks correct significantly. We asked analysts about one stock that they are watching out for the earnings season, because the earnings season kickstarts today with IndusInd Bank as well as TCS. And finally, the last one is Titan. Gave a very subdued commentary, and the numbers also for the second quarter update were rather weak, but the counter has managed to bounce back. Again, a stock which is not cheap at all. So most of this time we've kept it open for the guests to interpret it their way. But let's start with the first stock, and that is the markets have been extremely volatile. The Bank Nifty 2-3% intraday move is nothing common. But these are the times where some of the stocks which are beaten down should be taken home for investment for a long-term perspective. So Dharmesh, I'll start with you. The market has given a lot of opportunities. Some of them you should just avoid, while some of the stocks have come into attractive valuation zone. Which is one stock that you've recently told your clients, okay, hold this, buy this, and probably accumulate at lower levels, and hold this at least for 1 year perspective?
Yeah, so post-September, monthly numbers of the auto sales, so we have recommended Scots to our clients to buy that. Yeah. So the reason being, one is it's very cheap now. It's trading at around 15x TTM basis on a PER multiple. And if you discount the earnings of FY20 and 21, so around 16x if you give FY21 earnings, which we are expecting around 50 kind of an EPS for Scots, which is less than what they did 55, 57 kind of an EPS. Then also 16 times 800 is the value. If you look at the numbers, they gained 2% volume growth, which was much better than most of its peer. And considering the fact that they are predominant in the areas of Uttar Pradesh, Uttarakhand, Haryana and Punjab. These are the areas where the rainfall was good and there was no flood problem. Secondly, Ministry has recommended 7% kind of a MSP hike for the Rabi crop. So these are wheat growing areas where again farmers will be benefited by that. So this money and the type of motivation and the aggression which Scots have shown in gaining the market from M&M augurs well for the counter. So when we started the year, we were expecting 10 to 12% kind of a degrowth in the volume, which now we expect would be 3 to 5%, which even management has said.
Degrowth.
Degrowth. Yeah, it will be a degrowth. No doubt. I think FY20 the EPS would be 40-41. So then also it's fairly priced, because it used to attract a valuation of 27-28. Balance sheet is clean, debt free, cash flows are good, the models are right, and they are targeting the right segment. So I think here the value emerges if one is willing to wait for a year. So 800 is the target price which we are sensing.
When do you see volumes again recover? Because across the board, auto has seen a lot of degrowth. Tractors again is a very niche segment in which you can't have, because of like an FMC, you can't put two-wheelers and tractors. Where do you see volumes recover for this segment, and how do you see them?
See, this month volumes will be good, October. But post that, I mean November, December and January are the 3 weak months which we are expecting for all the tractor manufacturers. After that, when the Rabi crop outlook is more enhanced, there is more visibility, I think again the sales will pick up. So this is the last year, I mean 1 year, FY20, where we can see volume degrowth happening. FY21 would be a year of consolidation and a slight volume uptick. So that is what we are banking on.
Okay, that's the view. So Escorts is the first stock with a target price of in excess of 800, is something that Dharmesh is speaking on. Dinesh, you must obviously, in a market which is rather volatile and has come off significantly the highs, some of your clients must have asked you that which are the good stocks that you need to accumulate. Which are these stocks?
So we are backing Asian Paints.
Okay.
So in spite of a slowdown in automotive sector as well as other consumer-facing sectors, Asian Paints results have been robust in Q1. A 16.6% year-on-year growth, as well as on the bottom line they've grown by 17.7%. Also the operational margins have been held. They've bettered on that, 22.5% operating margins growth over 21.1% in the previous quarter. Strong distribution network, double-digit growth in the decorative segment, and a consistent performance over the last 10 years with a strong ROCE of about 35 and performing top line growing at about 13.9% CAGR over the last 10 years. The bottom line growing at 18% with a valuation at about 73 versus an industry of about 74 P ratio. I think from an overall perspective, with the strong management, we do expect that this stock would rate at least 15% growth over the next 1 year.
For valuations, no doubt is not cheap. If you compare it to the paint segment, yes,
So
the
I
entire
have to,
segment.
so I have to compare the segment.
But overall, if you see it, will be one of the 10 most expensive stocks this thing.
That's true.
And we've seen that, when growth slows down, most of the counters, be it an iShares or be it a Page or be it anyone, they tend to correct. So what's the margin of risk that Asian Paints has at this point?
So, see, the positivity comes from the operational efficiencies that we are seeing, right, as well as the growth in the decorative segment, which is primarily a high growth segment for them. So from that context, I would say the downside risk would be somewhere in the range of about 5% from here on, but an upside reward would be about anywhere upwards of 15%.
And you expect second quarter to be good given paint, how crude has managed to move?
That's correct. So overall, we do expect their operational efficiencies in the raw material, position is pretty benign. And it has helped them in the Q1, and I do expect it will help them in Q2 as well.
Okay, Avinash, what's your sense? Which is stock that you've told your clients to start accumulating?
In fact, Darshan, we have been recommending, Deepak Nitrite as a player from the specialty chemical space. We had started recommending earlier, but even at the current levels, our sense is that, this would be the first year where we would see operating leverage actually getting factored into, because the entire capacity for phenol and acetone actually gets used in FY20. And I think the traction has been pretty solid. In fact, our discussions with the management has revealed that within the domestic market, now they've garnered a market share of almost 60%. And both these products were import substitute products. In fact, two local players, Hardila Chemicals as well as Hindustan Organic, have now stopped making them. So it gives them a fair amount of headroom to grow. And most importantly, earnings recovery in the first quarter has been very solid compared to a total profit of 170 odd crores last year. They've posted a profit of 130 crores. So our sense is that you could see a lot of earnings growth pushed in by these two products, and overall, the basket of products is quite huge. So our sense is that over the next 12 months, typically not only FY20 but even the next 12 months, prices for both phenol and acetone should remain pretty decent. And clearly from a user perspective, I would believe that the market opportunity is pretty large. So here probably a price of 360, 370 is what we have been talking to clients.
But you don't think that because the entire story on Deepak Nitrite was on this new phenol plant that is coming in, it ran up significantly. Do you think it's priced in? And there was once a scare also that came out that phenol prices globally have come off, and that is when Deepak Nitrite also corrected. Do you think that that is the risk that anyone runs?
See, I think that risk definitely remains, because obviously these are commodities which are obviously driven by benzene prices. But I would believe that at least for the next 6 to 12 months, Darshan, the price trend is expected to be quite good. And I think obviously looking at the fact that these are import substitutes, the threat from China or typically imports could possibly come in only if prices correct significantly. So at least for the next 6 to 12 months, I would believe that these commodities or these chemicals would definitely pick up, and the user base is also pretty diverse and large. So that gives them a fairly good base to work on, rather than just selling to one concentrated or two concentrated sectors.
Okay, that's the view that's coming in round one. Stocks that you should accumulate at least for the slightly longer term perspective. Counters like Escorts, Asian Paints and Deepak Nitrite are being spoken about. Now, while these are the stocks that could move, there will be obviously a lot of stocks which are overvalued. These are the stocks that investors should be wary of. There's a high chance that these could correct also. So we'll ask our guest, Dinesh, which is one stock that you believe is overvalued now?
So Godrej Properties is what we're saying,
Yeah.
right? It's highly overvalued currently, and the demand is obviously slowing down significantly. The stock performance also in terms of the business ROC has been 7.2x for the last 3 years, and they are constant. They have a large project in the Vikhroli belt, which is an oversupplied micro segment. The consumer demand is also changing. The preference of consumers is also changing. So from that context, we feel that the stock is highly overvalued at 81x P. It's extremely overvalued.
Okay, and you believe that the slowdown which the others are facing will ultimately get to Godrej also?
Absolutely, because the credit availability is not going to go away, right? So the impact on the credit availability is going to be there for some time, and the rest of the real estate sector has been under the hammer. So this would impact the Godrej stock as well.
It was very interesting because we did this story because if you take a YTD perspective, the real estate index, despite all the problems, is up 15%, and Godrej Properties is up 75%. So it's up 5 times the real estate index also.
Yeah.
What made this move come up?
So honestly, we have no clue of why the sector is still. So I think the impact is yet to be felt, right, in terms of the demand slowing down. So I guess the next couple of quarters, the demand slowdown would significantly hit the results, as well as the outlook on the sector, and the specific stock would start showing up in the stock price as well.
Okay, that's the view. Godrej Properties is an expensive stock according to Dinesh. Avinash, what is one stock that you believe is overvalued?
Darshan, we believe that Colgate is definitely an overvalued stock. I think if you look at the kind of volume growth the company has posted, it's not been one of the best volume growth expected from most of the FMCG majors, and most importantly, from a category where the market penetration has already been close to 88%. I think incremental market share now for Colgate is very difficult, and within the personal care segment, they have not grown to the extent what market was expecting. In fact, recently they had an analyst meet where a complete rehaul on the market strategy was outlined by the new managing director. Our sense is that at these valuations it doesn't give that kind of risk reward for an investor who comes in at these levels. I would believe that it should actually correct significantly, or probably one should wait for these kind of new products and new categories to actually pick up and get reflected in numbers. So as of now, on a valuation of almost 35 to 37 times, I would definitely stay away.
I think the other thing for Colgate is that they've managed to hold on to the market share now close to 50%. It's come off, but I think the thread that people had from Patanjali, they had from the herbal, from Dabur, and all that has actually receded. In terms of broad workings, do you see stress coming in onto the financials of Colgate also?
See, I think in terms of pricing, they would continue to get a premium, but I think the bigger worry is the volume growth. I think volume growth has been a dampener, and I think if the company has to grow in, I would believe that there would be some sort of resistance beyond a particular time for price hikes. I think volume growth is something the markets would be more happy to see, and that volume growth has definitely been below expectations.
Okay, that's the view. And what's your sense, Dharmesh? One stock that you feel is overvalued?
Avinash Supermarts.
Okay.
So
Come out with numbers on that.
yeah. So day after tomorrow they are coming out with the numbers. But the point is, see, the valuation is on a TTM basis trading at 120 price to earnings multiple. So the company in the last 5 years CAGR, if you look at, they have delivered 34% CAGR on the top line, 44% on the bottom line. So that's fine. But from here on, that number won't be there. Even 20% kind of a CAGR for next 2 or 3 years would be very difficult for Avinash Supermarts, given the base which they have grown and the type of the market penetration others are also doing at the same time. So my own sense is this kind of a lofty valuations, defying gravity kind of a valuations can't sustain for long. So it's time to take profits from here, because ROE is around 20%, 17-18% is ROE, ROC is 27%. So 18% ROE. Growth you are expecting 18 to 20%. So why on earth anything will command a valuation of 100p kind of a multiple? So that I just don't, I fail to understand. Market is expecting that, but I do believe that market will respect the fact that this type of growth cannot persist for a long time. So from here on the price should correct significantly. Nothing wrong with the business. So only the valuation which the business is getting is not justified.
Okay, so valuation again is something that is being spoken about. Avinash Supermarts, Godrej Properties, Colgate, Palmolive, and if you want to read about valuations, we put in a copy yesterday of the 10 most expensive stocks trading in India. Obviously, topping the list is Godrej Properties. On a 12-month forward, it is trading at 83 times. On a trailing basis, obviously, it's over 100 times. We had counters like Godrej Properties, Nestle, Titan, Trent. So it'll be interesting to watch out that these are the 10 most expensive bets in India, and we've also put in the financials like a Bajaj Finance, which trades at almost 8 to 9 times on a price to book basis. So that's an interesting read for you to have. The next one is we're in the midst of earnings season. Obviously, Goa Carbon came out with numbers today, but that's a small company. Today, IndusInd Bank will come out with numbers, and that probably will define how this banking sector will move. And at the end of the day, you have large one TCS that will come out, which will define how the IT sector will move. So both pretty much large companies. Both one of them is under tremendous stress, and that is IndusInd Bank. But we'll ask our guest which is one stock that they're watching out for this earnings season, probably on the higher side or the lower side. I'm not sure which is that stock that you're watching out this time.
No, in fact, Darshan, we would like to put out how Bajaj Finance performs. I think numbers which came out on the kind of operational numbers have been pretty good, but on a sequential basis numbers have slowed down. So I think what kind of management commentary comes out post the Q2 numbers, and what is the kind of overall loan book growth, what is the kind of asset quality, and overall kind of improvement post some of the other smaller NBFCs moving out of the system. I would believe that despite the fact that market clearly gives a very significant premium, there could be some kind of obviously some signs of weakness or concerns, provided the festive season doesn't take off as per expectations. So I think here this is one company which actually represents the entire NBFC space, and any slowdown or any concerns from the management commentary here would be very keenly watched by the markets, and probably would have a kind of a rub-off effect on the entire NBFC pack.
Okay, so Bajaj Finance obviously will come out with numbers, and the most expensive financial institution stock in India, trading at valuations of almost 8 to 9 times on a 12-month forward basis. Probably on a current basis it will be even expensive, trading close to record highs. Dinesh, which is one stock that you're watching out this earnings season?
What we're watching out for is SBI Life Insurance.
Okay.
So they've been doing consistently well, and the gross written premium was up in Q1 by about 40% year on year, and so was the net premium income. In terms of the reach that they have a much wider reach, about 1.74 lakh of trained insurance professionals, 92 odd offices, and the network that they have, partnership with the SBI bank network, that's significant. Parentage is good in terms of SBI owning 62.1% and BNP about 5.2%. One of the first private insurance companies in terms of the capital adequacy. They have a decent amount of. They were the first guys who reached a break even in 2006, and they have about 2x solvency ratio. The persistency ratios are good in terms of their business. The 61st month persistency ratio is about 56.7%. Valuations are reasonable compared to the other peers, right? So from that context, the consistent performance and the quality of the network that they have, that gives us a favorable focus on SBI Life.
Okay, are you all bullish on the insurance space as all?
Overall, yes, because in terms of the impact on the insurance space, it has not been much of an impact in terms of the slowdown, and in terms of the in these times, the risk coverage businesses are obviously going to get better. And SBI has a significant entrenchment with the help of the bank network, and the distribution costs are much lower when they reach across this bank network. So from that context, we are quite bullish about the overall sector as well as the.
What's the pecking order that you're? There are 3-4 only. But
yeah, there are 3-4 only. So I would look at an SBI and an HDFC and then ICICI.
Okay, that's the view that's coming in. What's your sense? Which is the stock that you're keenly watching out this earnings season?
So I'm watching out for the numbers of IndiaNivesh Bank.
Okay.
So primarily because, see, a large chunk of the revenue comes from commercial vehicles. So it would be a fresh commercial vehicles as well as refinancing of the old vehicles. So there, our own sense is that the banking sector per se will come out with a better set of numbers this time.
Okay.
So there won't be fresh slippages scare and the gross NPA kind of a scare there. We are expecting around 40 to 43% kind of a NI growth for IndiaNivesh Bank and 44% kind of a PAT growth.
In Q2?
Yes, this quarter.
Okay.
At the same time, asset quality will remain stable, gross NPA 2.15%. And sequentially, slippages will be in the same. 725 crores was the last quarter slippage. This time it should be 745 crores. So no scare from there. If this is the number coming out from IndiaNivesh Bank, you can definitely expect better set of numbers from HDFC, Kotak, and other banks from the space. I mean ICICI Bank. So Axis and yes, may still fall under the. There may be outliers to this stream. So this is one segment which we are watching closely, and if this is the rule, then you can even see PSU banks coming out with a better asset quality numbers. May not be in the growth terms, but asset quality may remain firm. So this we are.
So
watching.
this 40% obviously will include Bharat Financial, that will be included,
yes,
right?
Yes. It's a console number.
Okay, and what's your sense? Because I think the street will also be watching out for commentary in terms of what happens in terms of the succession plan. How are you factoring in if Mr. Sopti probably does not get the role again and someone else coming? Is that a concern that you would have?
No, not really, because see, it's very much likely that Mr. Sopti will move out. So somebody else will take care, but he would still be there in the system.
In a non-executive
Yes, yeah. So
Okay.
that guidance and hand holding and parenthood would be there.
Okay.
So, and he is a very experienced guy. He has turned around IndiaNivesh Bank. So his continuity for next couple of years is very important, considering the type of situation, macroeconomic situation in which we are.
I think the street has concerns about exposure it has to certain financial institution, be it a Dewan or be it a thing. Is that a concern that you have?
Not really. I think that's already discounted in the price as of now.
Okay.
So many others also have exposure, so that has already been taken care of.
Okay, that's the view that's coming in. Stocks that need to be watched out as far as this earnings season is concerned. So that's something we spoke about. And the final stock we want to talk about, again, a stock which is highly valued, Titan. Now it's interesting. It came out with its second quarter update yesterday. Before, in fact, 2 days ago, after market hours, in which the jewelry business didn't do well. In fact, it showed a degrowth. The watches business was also rather stable. The eye care business did well for them. But overall, the management commentary was rather muted. But the counter, despite trading at rich valuations, did manage to. It was down 6% and then again has recovered most of the losses. So, what should one do with Titan? What's the outlook going ahead? Dharmesh, what should one do with Titan? At this price, someone wants to invest for the long term. Should they invest or wait for a bit of correction before they get into Titan?
Sell Titan, buy jewelry.
Okay.
So that's my recommendation for Titan. See, the valuation is way too high. So this year they will end with lower single digit kind of a growth, if at all. And jewelry contributes 80% of the business. So gold prices have gone up. That demand was not there in the stores. So I was personally there in Titan stores. I did not see that kind of traction which used to be there a couple of years back. And see, if a company is running at 20-21% kind of an ROE, single digit kind of a growth, margins are pretty low. Operating margin is 9-10%, PAT margin is 6-7%. So why on earth again the same concept, like why 70-75 kind of a PE multiple? So there was a scarcity premium which was there, and fall of PC jewelers and all added to this premium. So now I think everybody is fully invested as far as Titan is concerned. Fresh investment at this valuation is very, very unlikely, given the limitation of the space. So I would recommend, again, reiterate the same point, sell it, buy gold, you will be better off.
I think by your comment it seems you go very often to Titan stores to buy jewelry, but yeah.
One has to keep your home happy, right?
Okay. Dinesh, Titan, what would you recommend?
So we have a neutral view on the stock. Obviously the valuations are very expensive and it's quite lofty right now, and the business performance has not been that apt, and the slowdown will obviously pull back, consumers will pull back on their discretionary spend on high valuable goods, and jewelry may get impacted. With gold prices going high, the demand will. What we recommend is to stay neutral, but as if there's a decent amount of correction, then we could buy back again when there's a decent amount of correction in the stock. Currently, we would stay away from that.
Okay, and Avinash, your sense on Titan, what should one do?
I think clearly, I think at these valuations the risk reward doesn't look attractive at all. I think I would believe that unless we see a decent correction, only then one could look at it. But overall, I think the business would grow, but valuations at the current level don't leave any margin of safety. In fact, if there's a negative surprise for the Q2 and Q3, then one could definitely expect a decent correction. And I think around 1000 or 1100, I think one could definitely nimble into the stock. But again, from a longer term perspective, in the very near term, 6 to 12 months, I don't think you're going to make a lot of money here.
Okay, that's the consensus view on Titan. No doubt the counter has managed to rebound from the lows of the day, but valuation concerns still remain. Buy on lower level or sell the counter, but no buying at this level is something that's been spoken about. But with that, we're completely timed out on this edition of Hot Money. Let me thank my guests who've come in. Dharmesh, thank you so much for coming in. Dinesh, Avinash, thank you so much for coming in today. Our PQ comes up next. Stay tuned to BloombergQuint.